Hopefully it won't be that long like the midweek for last week. So this is the dollar index. The dollar index looks to be, I mean, like it did 5 ways from the top, like the euro. Now, every time that you see, guys, this is a tip. Every time that you see a 5-way move coming out of the top, trying to find a way to see if we can relate it with the previous move as a flat. Having said that, this is the previous move, and then you're gonna see 1, 2, 3, 4, and a triangle, and a fifth way to the 1.236% right there, I believe, on an inverse Fibo, I believe it got. Yeah, something like that. Now, I don't see it as a flat unless it's nesting. I gotta be honest with you. Unless this is 1, 2, 1, 2, I doubt it because the overall market is not supporting. But I always do that when I see a 5-way move. Anyway, your risk to the downside on the euro or on the dollar is right here, is well defined, and that's what Elliott Wave is all about. It allow you to define a risk, right? So that's for the dollar index. With the dollar index, you can have questioning about what's going on, and then that's when we use something which we use a lot, which is called the market correlation. Okay, this is the same index in the closing line right there. You see it? 1, 2, 3, 4, 5. Very clear right there. Now, which one is the clearest structure on the market? In my opinion, the clearest structure on the market is this one. This is the Norwegian krone right here. Very clear, and only that this pair, if we take a look on the 60-minute chart, it did a 5-way move to here. You don't see it that good here on the closing, but if you put the candles, wait 1 second. You're gonna see like it did 1, 2, 1, 2, 3, 4, 5, and then a 4 and a 5. So technically, there is a 5-way move right here, and then it looks like it's doing a flat as a B-way. That's what we've been saying, that this pair is leading the market. So technically speaking, this pair is showing the witnessing within the dollar. Not only that, if you put from the lows, very clear right here that it did like a 1, 2, 3, a 4, and an extended wave 5, or it did a 1, 2, 3, 4, 5, a B, 1, 2, 3, 4, 5, a C wave, when the two legs one second. The two legs comes pretty close to the break even, but it's a clear 1, 2, 3, 4, 5 waves, 6, 7, 8, 9, 10, 11, 12. So technically it's a 5, and a 3-way. So technically it's a 3-way move that need to correct lower. For me, that's the most clear structure in the market. Now, what you have is a move that comes here, should reverse around this area in a flat and going lower. Now, let me put this back, and for the new guys right there, you guys understand why market correlation is so powerful. If you have any doubt about what the dollar is doing, check this. Look, that's the dollar on top of the New Zealand crown. You can go, I don't see any pair as correlated with the dollar like this one. Look at that. Look at that, Isaac. It's the same chart. Look, same chart. It's amazing. They are exactly and better and clear counts because it's only one pair. So technically, if you know on the 60-minute chart from last night that you have 1, 2, 3, 4, 5 swings down, that's what it's telling you. This is telling you that after 3 ways back, the New Zealand, this pair, the Norway crown or the Norwegian crown, whatever, or the whatever you want to call it, is gonna go down, and that's telling you that the dollar is gonna go down. That's how the new guys right there. That's how you can get the feeling of where the market is gonna go. All right. I mean, it's completely amazing. If you guys follow that correlation, I don't believe, I gotta be honest with you, I don't believe that there is any pair in the market that correlate with the dollar like this one. Look, this is a monthly chart. It's the same chart. I mean, and the thing is that it's not a popular pair. So this is telling me that the dollar is gonna get weak. This is telling me that the dollar is gonna get weak. What do you mean showing the same, the swings? 5 ways down? Okay, this is telling me that the dollar is gonna get weak in at least one more leg. Look, the 4-hour chart, right there, they're almost equal. Because if you put the dollar cat on it, the dollar cat correlate, and I always say with the dollar pretty good. Look, but the term between the New Zealand and sorry, the crown and the dollar, they are more tied than with the cat. So technically speaking, and getting back to a small time frame here, you see that the cat is higher here. The cat is higher here compared with these two. So I believe that the cat, it did probably 1, 2, 3, 4, 5, or it did a 3-way, and the cat is gonna get either weak and test the 38 or 2 again, and that's why the cat is being leading the path to the upside, or the cat is gonna get into the sideways consolidation move like it did about a month ago. Let me see, like it did right here. When, let me see, what was the move? Like it did right here. Look, the dollar was lagging and the cat was leading. Probably the same thing is gonna happen right here now. Now, having said that, what I see pretty soon is, like we were mentioning since last night, a type of dollar strength in order to be reversed. Now, let's do another correlation. Let's put the crown together with the euro and the dollar index. And this is what you got when the red one is the euro, the blue one is the clone, and the black is the index. Now you can see, of course, they are inverse. In other words, if one goes higher, the other one goes lower. But the structure, they are very similar when it comes. Let me put these two together. You see, they are very similar structure, at least on my eye. This is telling me that this one gonna go lower and then gonna do something like what it's doing here. The euro is gonna go higher and they're gonna find themselves around the middle before this one keeps going higher and the euro keep going lower. So technically, this right here, this line is like the clone is gonna go here and the euro is gonna go here. And then they're gonna do this and something like they did right here, look. So at least for me, the path is very clear. And I believe that that's what's gonna take place between the dollar pairs. Now, the rest, the metals, they are kind of tricky. I gotta be honest with you. The metals, they're kind of tricky if it comes to correlation. One second. Because if you see that, let's activate here oil. Let me see where Cooper is. One second, because I cannot put everything at the same time. I believe that, the market is setting up a move in the dollar, but like I say, nothing is right in stone, and I believe that there is nothing wrong to take a dollar short right now in this market, in my opinion. Okay, here we go. The blue one is the Dow Jones, the green one is the S&P, and the red and the black is the US dollar. You guys see they are inverse correlator. Sometimes they correlate, but at the end of the day, they're gonna break the correlation. Now, let's put there that I want to put the risk pair. Let me take the dollar for a while. Let me put the risk pair right there and put the Aussie. I want to put the Aussie right there together. One second. Okay, here we go. And you guys gonna see how the Aussie, which is the green, this green is the Aussie. So the Aussie is like a leading, technically leading the indices. The indices or the Aussie should be higher or the indices should be lower. Now, seeing the rest of the pair, I believe that what's going to happen is that the indices, they're going to stay around the area, consolidate around here, and then Aussie is going to cash out higher with the indices, seeing the dollar and what the dollar should be doing. And then every one of them, they're going to crash down. That's my, that's my, look, those three pairs, how they trade together. I mean, being the blue one, the Dow Jones, the S&P, the look, the S&P and the Dow Jones is a copycat, one of the other. And then, look, Aussie is lagging in the monthly. So technically, in the monthly and the daily, you can see that the indices, they are running ahead of the Aussie trade, of the risk pair, in other words, which is the Aussie. So what we're expecting is, that's your point. I know it is. What we're expecting is, like I say, that Aussie needs to play cash out, and the way, no, technically I don't expect Aussie too much higher either, DV. But I believe that the indices, they're gonna outrun the Aussie to the outside, so they can play a type of cash out gain, and from there they're gonna go lower together. You know what I mean, right? That's how you see it there with the correlation. And we do this on purpose, guys, on the seminars, because this is something that we always promote, is that a trader needs to use market correlation. If you don't use market correlation, you're going to be dead in the water. Last night, we closed about 165 picks in profit. Why do we do that? Because we closed the trades early? No. It's because we knew the path of the market. Of course, we don't know what is going to be the turning point. We are no market maker. But at the end of the day, all those trades went to the entry points or close to the entry points. We were trying to get a dollar long with the cat. We didn't get filled by about 10 picks, but do not matter, because I know that those entry points, they're going to be traded again. You guys understand where I'm coming from? That's how we look at it, because the market correlation is the one that dictates for us. Remember, the clear structure. When the market is kind of confused, look for the clear structure and go from there. You always gonna find answer at it. And for me, the Norwegian crown is showing the path for the market. Very clear right there, in my view. So, any question, guys, about the dollar correlation? Now, let's take a look at the individual pair of as a dollar as a pair. In other words, not as a correlation. One second, let me get the chart here. I mean, I don't know, guys, if you can see it. If some of you, I know that some of you use market correlation, but at least in my eyes, it's very clear. I see, I can be wrong, don't get me wrong, I can be wrong. But at least it's very clear what the market should be doing. Now, this is the dollar index in 8 hours. What are you expecting? A three-way bounce to around 76.5, and in extension can go on to 75, depending on which count it is right here. The New Zealand, the crown, the Norwegian crown is calling a three-way, not the nest, because like the euro, this low went below these lows right here. But well, that's why we keep both the scenario open. Now, technically, what we have is an A-way. We should be in B, and then another round probably tomorrow of US dollar selling is going to happen. And then we're going to know when he gets to the previous 4 and the bottom of the previous 2, we're going to get, this is a huge support right here, Elliott Wave Y. It's a previous 2 bottom and it's part of the previous 4 also, and also is the highs that we have around July. So Elliott Wave Y, the 76 area is a pretty good support. I would think that should be around 138 and a half in the euro, if I'm not correct. Now, short time frame in the dollar, this is what I see. Like I say at the beginning, you see 1, 2, 3, 4, 5. When you see something like this, 1, 2, 1, 2, 3, 4, 5, 1, 2, 3, 4, and a 5, and then you see a 4 and a 5 here. I'm sorry, my bad. When you see that the pair does a 5-way move coming out of the top, rules that you always need to follow. Get and check if this can be a flat coming out of the previous structure. That's been the case. There is overlap right here. So we believe 99% of the time that this is the top on the dollar, and this is an A-way on the dollar. And then not only that, the high right here is the 1.618 by the pit of the Berg's 3-4. So the long dollar, the long euro trade should be safe and pretty good trade when we got filled, in my humble opinion. I can be wrong, but well, let's see. Now, that's for the dollar. Now, let's see some metals here that we have in this chart. Let's start with oil. Oil is trading lower today, and to be honest with you guys, kind of worry me a little bit what the metals are doing. Why? Because this is oil, right? This can be from here. You can have 1, 2, 1, 2, 3, 4, 3, 4, and 5. You can have a 5-way move down here. And then if this is a B-way, we're fine, because then oil is going to trade higher, and then oil is going to trade lower with the euro. But if this is a B-way, we're expecting a move higher in oil tomorrow, which means euro dollar higher, which means dollar lower. Now, taking a look at oil in a 1-hour chart, it looks like it did 1, 2, 3, 4, 5, 1, 2, 1, 2, 3, 4, 5, 1, A, B, C, 2, 1, 2, 3, 4, 5, 3, 4, a 5 here. This can be a flat. It do not matter. That can be a flat right there. And then 5, another 4, and another 5. So technically, they are correct. Now, from the lows, most likely what I want to expecting today is 1, 2, 3, 4, and a 5. This look very vertical, and that's what I say. Kind of worry me a little bit, but well, it can get in a deeper correction to the upside. So that's what I say. It worry me be a little bit with the whole metal things. I want to see how it responds from around 80 before, to see if it rebounds higher or if it get a continuation to the downside. Now, Cooper, on the other hand, is been following the weight count pretty good. And then it looks like you got the 3, the 4 to the 38 or 2. Now you got 1, 2, should trade lower, and 5. And that's why I mentioned about now 45 minutes ago on the room that we are expecting those type of wave B that takes sometimes either it's going to be a fast move on the dollar into the seaway, or it's going to take fast, or it's going to take sometimes to allow these metals to enter in the next cycle to the outside, being risk on to the outside. Let's keep that in mind. Now, any question about the dollar metals? Any question about it? Okay, let's move on now to the individual pairs. Yeah, we're gonna go to gold now, and because I have gold on the other provided. We're gonna try, guys. We're trying. We have two agreement already in place. When we game, I mean, we're trying to provide you guys with eSignal and Morris Wave, so you guys have a better laboring tools right there for those who love laboring area way. Okay. Now, on the individual pairs, I mean, there is no need to cover that the long-term charts. You guys understand each one of them where we are. We believe in the short time frames, because the market is been acting as we forecasting, that the euro did, like we've been mentioning, a five-way swing to the upside when you got one, a flat two, one, two, three, four, five. It's when notice right there that you take it from here, that high right there is the 2%, and then it did a fall to around the 38 or 2% right there. It went a little deep to the 50, and then we got a 5. If you take a look at the RSI, there is divergence on the high right here, same here. So everything looks to be good. And now what you are expecting is an ABC when I see in the market correlation, we should get 3 backs. Maybe we end in the A way now. I don't think that this is all we're gonna get in the B way. I believe that maybe it did a flat B, and it's gonna end the C way around the 50% retracement here. We should trade higher and lower to test 3480 before going higher in 5 ways. That's what I see. Now, the Euro index, same scenario. The Euro index, what is it? The Euro index did the same 5 ways. 1, 2, 3, 4, 5. What you're expecting is A, B, Z, and then the move to around here. That should end the correction on the euro. And this is something, guys, I want you to start doing it. Until you see, I know everyone wants to sell the euro dollar, including me. But until you see the euro index passing this level, don't sell the euro dollar, because you're going to be on the wrong side of the market. So keep that in mind, what these indices, they are all about it. Now, that's what we see on the euro. S&P, which is something that needs to be taken pretty close right here. It looks more sideways to come. I would say sideways to higher. Maybe it's denying. I don't see sideways here. Like I don't see it here either. Like I don't see it here either. So for me, maybe the S&P ended the A way here, and then the S&P is gonna go in 3 to around this area before trade the 1258 area that we've been mentioning for a while. And that's led higher in risk is the one that is gonna take the dollar down, in my opinion. Now, another matter, Gore, let me see what he did today. Exactly, it went to the middle between the 23 and the 3802, and this is one of the reasons that I keep saying that maybe we're gonna get a compressed wave B. Why? Because I need to wait from the metals to the metals to get in this 4 and bounce for the C wave to happen. That's what I see in right now, that the metals are trading like that. If we see, and if you guys notice, is I left one position open, in the euro trade as a limit. You guys notice that, right? Okay. The reason being is this one. Let's go, when Gore make this low right here, Gore is gonna bounce. Now, this move from here, I had labeling like this, but this move, I know that at least, I know in Gore that at least one more low is gonna happen. You guys agree with me, right? At least one more low, it would take place. The reason that I say one more low is because if you take a look from here, the 2618 of this move is the low. And then, having said that, I know how it works. And then you can say, after the fact, if you see that bounce too hard, you say, okay, 1, 2, 3, 4, and 5. And then you should divide right there. That's how it is sometimes. Now, my view is that at least 2 more lows is going to happen, like it is right here. 1, 2, 1, 2, 1, 2. Now, why do I leave one entry on the risk trade open? Because the way the market is trading right now, related to the metals, after this low, we should get a bounce in the gold trade. Possible to around this area, or possible to the new high like we believe is taking place. Now, the same is with Cooper. Cooper is going to bounce. Cooper is dropping in 3 waves. So I got that question in my mind, thinking about the weekly and the daily charts. What's going to happen when those metals ended the 5-way move that they started right here with a risk trade? So I got that in my mind, and I don't want to sound as a friend of mine on Twitter that he still wants euro to 150 something, Aussie to 117. I'm gonna be that bullish, but I want to leave one door open just in case. That's a thinking. That's me thinking too far out. But at the end of the day, on the euro trade, I'm taking profit 138.5, 139.5, And then if I see the way it's structured and the market correlation, I close the whole trade. But that's the reason why we left one of the entries as an open in the euro trade. You see now, guys, DV, Isaac, all you guys see the thinking behind, right? I know you guys most likely won't agree with me, but well, that's what I'm thinking. We need the S&P to break down. Remember, on the S&P, all you guys have is 3 ways. Remember that. The dollar, 3 ways. So let's not run before we work. Let's be smart. And that's why I say there is nothing wrong to taking a long risk. Maybe you hit the lotto right there. Who knows? That's my thinking. That's why you see that one of the entries, the limit is open. You see it, right? Okay. Now, let me get back to Aussie now. Go to the metal pairs, which I love those pairs. I gotta be honest with you guys. Aussie is a money-making machine when you got the right count on it. That's mine too. But why are you gonna close the door if you can have an opening? When you think that that's smart? Exactly. We're gonna cash at 138. We're gonna cash at 139. But remember, we don't know for a fact in which degree we are in the euro dollar. Don't get wrong about it, DV. You know what I mean? You don't have an insurance that say which degree you are. So I would like it. I would rather leave one door open, like you said right there. Good thinking, because who knows what happens if the euro gets to 146? Who knows? That's for, let's put it this way. That's some trick experience, because last year at 118.70, when it was around 119, nobody thought in the whole world that the euro is going to get to 149. Everyone, including me, we were thinking 112. Exactly. Am I right or no, Isaac? That was a dream at that moment. But don't you agree with the idea that I'm telling you? Leave one door open. Everyone is, no one. It cost me about 100 grand. I can tell you, I'm not ashamed of that. I make in May of 2010, we make 179,000 dollars in profit in 1 month, and it took almost 100 in June, because the idea that the euro was to the downside, and it kept going higher, and we all kept selling it. Boom, higher, higher. It took almost all the profit from May. To be honest with you, something like that. Last year, we were in the fund manager account 100%, 89% positive between January to May. We almost doubled the account in 5 months. And it took almost 50% of that profit in June and July, and nobody in this world believed at that moment that the euro can get to 149. So let's keep going. That's why you gotta be smart. You learn Every day you learn something new in trading, guys. Now, Aussie, I'm more in favor of this scenario. There's more wave two, but like in the euro, there is no insurance that this is a 1-2-1-2. No one can insurance that. So maybe Aussie is here for a bigger retracement. Who knows? So as a trader, if you're taking a long Aussie around here, leave one door open for a possible move around here. Even though I know many of you don't like it, I know that many of you say, are you crazy? No, I'm not crazy. I've been trading this for almost 11 years, and I know that nobody have the crystal ball in this game. So, better being smart than sorry. You know what I mean? Better being smart than sorry. So, exactly. That's the good way. Thanks, DB. That's the good way, Isaac. The same with the euro. I mean, announcing as of right now, as of right now, as of right now, I'm going with this scenario and move to the previous, this resistant area, 101, 102 area. That's my bias right now in the house. But I can be wrong. You got me? Right here, what we thought right here, guys, after this, we thought around this is going to drop. Remember? Keep going higher. It keep going higher. So that's the thinking for today's seminar, guys. We know a bouncing risk is confirmed. I know all you guys agree. And my message to all you guys as a servers is always let's leave one door open for the risk trade. You know what we're fighting? We're fighting central bank being dollar bulls. That's what we're fighting. And I want you guys to understand that. I always say that there's going to be a time when they're going to give up because they cannot be printing money like they are. And then, I mean, printing money or what they're doing is not a solution. That's a temporary solution. At the end, they're going to have to give up. That's what we wrote about 2 years ago. Do the government knows Elliott Wave? Because after seeing 5 ways down in 2008, I would not spend that much money trying to correct a market that is telling you everything that those 5 ways is going to be a sit down. So that's my thinking. Now, the weekly chart, let's keep going. And we're going to go there now, guys. Davey, we're going to go there. Now, that's what we are for Aussie. That's what we have for the euro. The same, I mean, I don't going to go into too much details. We do a great photo every day. Nothing has changed in the market, in my view, saying yesterday to today. I don't know if you guys agree. So we did a video last night. Market's been a beauty today. So technically speaking, I believe that we know more or less what the market is going to do. Now, let me show you the euro pound. I believe that the euro pound is doing this. It did A, B, C. This is A, B, C, W, S, and then it's going to trade lower to around this area, and we're going to send the trade later on to buy the euro pound also around 85, 90, 89, targeting the area around 89 and leaving one door open also, but well, around that area. All right. This is telling a lot of things also about the bullish euro, because technically this is a 3-way move, but this is corrected. It did 3 ways from the top. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, 50, 51, 52, 53, 54, 55, 56, 57, 58, 59, 60, 61, 62, 63, 64, 65, 66, 67, 68, 69, 70, 71, 72, 73, 74, 75, 76, 77, 78, 79, 80, 81, 82, 83, 84, 85, 86, 87, 88, 89, 90, 91, 92, 93, 94, 95, 96, 97, 98, 99, 100, 101, 102, 103, 104, 105, 106, 107, 108, 109, 110, 111, 112, 113, 114, 115, 116, 2, 3, and in overlap. That's telling you guys in Elliott Wave, for the new guys right there, that's telling you continuation to the upside after a corrective move. Understand, guys? The new guys, you guys see what I mean, right? Three ways, and three ways need continuation to the down outside in 3 ways, right? Now, that's for the euro pound. The euro yen, like we've been mentioning, the thing is that the service, guys, our service is so good that you guys are out to the minute in what the market is doing. I don't want to sound bad right there. Now, right here, like we say the other day, why the euro, this is the euro yen, was coming from divergency. I think that the move ended right here. Look, divergency on the 303, divergency on the 505. So what is coming? Minimum 3 ways to the upside. Minimum 3 ways to the upside. Let me show you something, guys, right here. Okay, this is the euro yen weekly chart. Of course, it's coming from around the 618 or this leg, but I truly believe that the euro yen is gonna look. I'm gonna sound crazy. Maybe I'm the only one saying that, but I believe that the euro yen is looking for 82. What I see is 3 ways, a B, C, 3 ways here as a W, 3 backs to the 50% by the peak, and that's telling me euro witness to come. You see that, DV? Very clear for me right there what's going to happen with the euro yen. Now, as a waiver, you need to worry only about this move right here, because you know what the yen is going to be. So what you're expecting from here, what is this? I mean, what you're expecting there. Now, for that, you move on to the daily. On the daily, coming from here, you went down, coming from here, the way I look at it is 1, 2, 3, possible 4, 5, 6, 7, 8, 9, 10, 11 wave is what I have. Now, let me notice you guys this. A, B, C, W, S, 1, 2, 3, 4, 5, a flat B wave, and another 5. Now, I want you guys to notice that this move right here is, if you take a look at this move, is the 1618. And then I got a question in my mind if this is, I got a question right here, if this is B, and then this is 1, 2, 3, and then we are now in the 4. If we are in that scenario, the bounce on the euro yen is going to be less, and it's going to look from 105, which is around something, it's going to be around 138, 139 on the euro dollar. Otherwise, if it's the other way around, and then it's going to be a higher bounce. So again, nothing wrong to taking the long right here by leaving the door open, because from here This is a daily. If you take it to the RSI, it's a three-way move so far. So, I mean, looking at the RSI, look, 1, 2, 3, a correction in the middle. This can be a flat. I have several alternations of discount. This can be a flat, like I believe it was. I have it like that at the beginning, when that can be a flat. And then this can be 1. I have several alternative count right here. This can be 1. And then this can be 2 right there. And then a next 1, 2, 1, 2. This is, I believe, one of the alternative I have. And then now we got from here, we got 1, 2, 1, and then we end the one cycle. What I don't like is that the correlation between the W and the S is too big, but we're around the 101 is okay. So if it's gonna come back here and make the new low, but this pair on the weekly is calling lower, but it's out to the bounce right now, and that's something that I want to tell you. From here, it's a little confused, but well, this pair is always like this. This is a pair that if you're gonna take a long swing trade, you better close the computer, don't even look at it, because it gets tricky sometimes. Like every yen pair. I know that Zach, you like this pair. I don't know what you're seeing, but I see 105, 106 very easy within the next week or so in this pair. Now, with the RSI also, you can call it like ABCW. How you doing, Rafi? Man, the seminar is not the same without you. You can say ABCW, ABC with a truncation, and this can be a truncation or a flat. Look, the RSI is pointing higher here even when the market didn't. That's the only way that you guys gonna see Eric calling how they be a truncation. Yeah, 105 is a fat side. I see it. No issue with it. So technically this can be WS, and then from there we can have A, B, and then it's A, B, and we're looking for 99 coming down from 105. And then, no, it's going to be the seminars. It's going to be at 2 from now on, and the photons are 1 roughly. Now, this 99 is 129 on the euro dollar. That put in place that the euro dollar is ending 5 ways from 145, 3 backs and dropping back, and then it's going to go WSY, and that counts goes pretty well with the counts, with the primary count on the euro dollar. You see it, DB? And then from here, from 99, we should get a bounce like we're spreading on the euro, and then going lower. But if that's the case, 105 is a fat. I want to point you guys out that from the first leg, the low is the 102 to the pit. So keep that in mind. And then the selling point should be 105.82, 106 area, which is also the previous 4 or less a degree right here. Those are in the daily. Let me put it for you guys on the 4 hour. You guys gonna see it better. You see, from here, if you label it from here, you can label this like this. 1, 2, 3, 4, 5. This is a B wave that went to the almost the 618 there, and then from here you got 1, 2, 1, 2, 3, 4, 5. And then now 105.82, 106 in place with no question in my mind. And now look, the 618 here, the low is the one. All right, that's like Isa say, that's a gift money right there. You guys agree? I know I'm a good friend, and I can tell you guys that the best trader I ever seen that do not use Elliott Wave. Zach is the best trader I ever seen. It's amazing how good he is with his system. But right here I see 5 and 3 backs and lower. Now, in what? In the euro dollar? No, we didn't got fear in the euro dollar. All right, now let's move on. Now I'm going to start asking you questions, guys. The path, like I say, very easy, very predictable. I mean, I don't want to change or something, but don't you guys see? You guys see what I'm seeing, right? I mean, I see it there. Oh no, no, we didn't do we don't do the 3802. We go with the 56, 1 and 76. Now, the Singapore dollar. It was in the weekly, eh, David? Yeah. Now, let me show you something that I want to share with you guys about that pair. That's the weekly. I got data in this pair onto 1990 only. I wish I can see it more, but I got that onto 1990. And then I'm assuming this is a three-way move. And looking at the RSI, I see that I got divergency here. So that's telling me that this is a 405 and that a huge cycle possible end around here, DV. You follow me? Now, from here, you can see 1, 2, the lowest read on the RSI here, 4, and because this high went above the previous wave 2 read on the RSI, that's not a nest. So technically 1, 2, 1, 3, 4, and then look within the wave 5 how this lob, you see 1, 2, 3, 4, 5. Look like right here you got the previous, you got, this is on the weekly chart, you got right here you got a low on the RSI and a divergency within 5. So it's a beauty because let me tell you something about RSI. In the 5-way move in the RSI, this right here, and we're going to do a video on the RSI reading. Somebody requested, I don't know who was it. Right here, this should be your lowest read on the RSI, the 3 of 3. And then from there should be the right here, the second lowest read on the RSI. And then the 3 of 3 should give you, should test these two. A better example right here. The lowest read on the RSI around this area, on the 3-way, on the 3rd way. Should be another one here, but we don't have the data. From there, what you have, look, within the 5-way move, you got the 303, the lowest read, the 305, another read. That test the previous of the 3 of the 3. I don't know you or the five. I don't know if you guys follow me there, but that's what I see in that pair. This pair looks very similar to the dollar cat in some degrees. Okay, I'm gonna get back there. I haven't covered cable yet. 1 second. Then on the daily, this is what I see. Same scenario. 1, 2, 3, a flat 4, 1, 2, 3, 4, and a 5 with an extended wave 5. Now, because it's an extended wave 5, what is that? I didn't get the divergency on the 3 because I'm labeling as an extended wave 5. Now, the final confirmation that the move, that's the final confirmation is a break about around 136. Is going to negate any bearish in this pair. That's on the daily. On the 8 hour, from the lows, what we see is this 1, 2, 1, 2, 3, 4, and an extended wave 5. What we should do, look, another pair showing the dollar move. You got 3 ways to the downside. It should do a B way and maybe another 3 ways back to around 127 area, find support there, and going back higher. That's what I see. Any question, DV? Now, very important is that he needs to get extension here before making a new low. Otherwise, you're going to have, because if you take a look, you got 1, 2, 3 swings to the downside. But it looks very vertical. I don't know you guys agree. It looks like, it looks like he's going to make, and that's why, because it was an extended 5, that's why the decline, it's going to test here. 125 and change. I believe so. Always does. And an extended 5, guys, when he revert or end the cycle, guess what? Always is going to reverse pretty fast. DV knows that very well. He's a master of those theory, but that's the way it is. And always it's going to test the previous wave 2 low. 95% of the time. That means what is telling you, DV, dollar witness to come. Now, levels 129, 130 against 131 should be a heck of the trade to short the dollar right there. Tell you the truth, probably even better than the euro, if you guys want to see it like that. Now, cable. In cable, that's a beauty too. Let me show that one. Well, I show it at the beginning. I go with you now, Rafi. Yeah, because you know what? Right there, you're correct. This pair looks, this looks very similar to the dollar cat. So maybe this is the low. Remember, you got it 3 ways down. You betting in a double trick correction also right there. So maybe it's gonna do like a triangle. I wish it can get into the triangle so I can get long there. That well. Now, the crown, it looks very nice. 5 swing lowers on the 4-hour. And this is something, guys, thank God you mentioned it. This is something why I got my suspicion with, and I'm leaving one move higher in the euro. Look, W, I want you guys to get into this pair. This is the lowest low among this one. In difference to the euro, when the lowest low, I believe it was right here. Now, this is the 76.4 right there. By the peak, look that 76.4 right there, man. Unbelievable. And that's telling me that this is W, S, and the labeling is A, B, Z, A, B, and then, let me see, because I don't even understand what I did right here. My bad, 1 second. A, B, and Z, this is A, 3 backs. The A wave was a flat, a flat, when you got A, 3 backs, 1, 2, 3, 4, 5, and then 3 back to the 76.4 right here. This is an amazing count. Look, and then this is the B, and then one, a flat B, and a C. That's an amazing count. Amazing. You want to know Elliott Wave? Try that count. Try to label that right there. That's very hard to label right there. You see, David, Isaac, I know you guys love Elliott Wave. That's very hard to figure it out right there. And then from here, you got 1, 2, 3. When you relay these two, it went to around the 1.23. But what this is calling, guys, this is calling for a retracement, a deeper retracement, because this is telling you that the low that we have on the euro dollar is W. And there is a count on the euro dollar that justify that as 1, 2, 3 without any question. So I want to leave one door open because this can get extension lower. This can get here, or even I bet around this area should bounce. But you know, Isaac, what I mean, right? This is a whole cycle on the euro. Same day here, same day here. So keep that in mind. Let me get back to the euro. Raf is going to kill me. But Raf is one of my preferred kinds. So it's been with us for a long time now. What I mean with that is we label it as the most bearish as we can. W, S, Y, A, B, and we're labeling like this. When we're going to get now this S and the right here 129 and the bouncing high. But between you and me, guys, there is nothing wrong with this being A, B, and this being Z. Nothing wrong. Nothing. I would say, oh, I'm sorry. And this being A, yeah, B, and Z. Nothing wrong. If the euro retreat right there, look, I would say that makes even more sense. Look, equal legs at the bottom, if you guys didn't know that. That's why I'm leaving one position open. You follow me, guys? That's why I'm leaving one position open. And then that being the case, the euro should retreat minimum to 141.64 area. Extension 143, 145. Don't ask me how it's going to get there because I don't even know myself. But it can get there like 1, 2, and 3. This is a manipulation, guys. They know that everyone is bearish Europe. So keep that in mind. Now, cable. Very interesting pair. DV is speechless. There we go. But it's cable. I know you do love cable. Cable, my friend, I gotta tell you something. The more I look at this count, the more I like it. To be honest with you, I see nothing wrong still within, but the market correlation is calling for this being the low. So this can be the low or D, or this can be W, like I explained to you yesterday. If I love cable like you do, I would say that this is the low right now, and then you need to buy cable here. Because the dollar is gonna get weak. You follow me? Yeah. You should be okay with it. You guys follow me, right? I mean, the market correlation is calling for that move is down. This can be labeling as a down move. Don't get me wrong. Right there, that can be labeling as the move is done to the downside. You understand what I mean? Very easy. That can be labeling. Exactly. Exactly. Yeah, but wait for break the channel of wave 3. If you're talking about this channel, there's nothing wrong with breaking. Wait for many times break the channel. But I would buy it, Rafi. Why don't you buy the euro, man? You're buying the euro, right? Buy the euro yen. Buy the euro pound. More clear than this. In my opinion. That's for cable. For Aussie, I know you asked me. I believe. I'd say market correlation is telling me that the market correlation is telling me that that's no way for, that's part of the new cycle higher. Like I said yesterday to you. No, I'm higher. Yeah, that's what I like. Like I mentioned yesterday to you. One second. Like I mentioned yesterday to you, everyone, including me, we were saying this, and we say, okay, it's gonna do a flat to the downside. It looks like it did a flat on the first leg, but who say that this needs to be the bottom of the D wave? Nobody. Looks like possible. Looks like possible. But seeing what I'm expecting on the euro, you know what we're expecting on the euro? This. We're expecting. This is the most likely scenario on the euro before the clash. You guys agree with me, the euro guys? Mm. I tell you why. I tell you why. Because the euro, in the most logical path that he needs to follow, the euro now needs to trade. Let's be no dream about it. Let's be realistic about it. The euro should trade about 139, 140, and it should drop in 3 ways. This is the 139, 140. Should drop in 3 ways. After the 3 ways on the euro to around 130, the euro should get back to 145. That's going to be your E wave. And from here, the euro should crash, same weekend, and the dollar should get king right there. You see? That's what I like about cable, to be honest with you. No, yeah, 140, exactly, yeah. You like that, DV? I think that's the scenario there. I would say less than that. And then with Aussie, are you asking me? One of the two scenarios here. Maybe Aussie is going to do a leading diagonal from the top. Who knows? And maybe to go with the overall market, then you got a trend line here already in place. Maybe Aussie is going to go around here, set in 3, and then 1, 2, 3 to correlate with the possible path that many pairs are calling. Who knows? That's running before walking. So let's not go there. You guys see what I mean, right? That scenario, DV, I know you like that pair. It's very possible in Aussie also. I can tell you something. This is a questionable, some degrees, 5 ways. To no needs to do, because the ending, the diagonals can be 5, 3, 5, 3, 5, and can be 3, 3, 3, series of 3. So maybe it's going to do a 1 as a 5, 3, 5, 3, 5, and make a leading diagonal for the top. Maybe that's what Cooper is going to do also. You know what I mean? Maybe that's what oil is going to do also. I've been thinking about it, because I always try to correlate the whole market. Always try to correlate that the whole market makes sense. And this is one of the ways. Yeah, I like euro. Better than Aussie I haven't taken a long Aussie. I would rather take a long euro, a long, because that's the same things that we did yesterday. What do we short Aussie? I know we short the euro, because we were shorting the metals yesterday. No, not technically Aussie, the metals. I don't want to play with it, because Cooper is very bearish. Any pair of guys? Any other question? I think everything is very clear. You can ask the new guys. Don't be shy, guys. Ask any question right there. Any question, Raji? Any question, guys? I think everything is clear, to be honest with you. Yes, of course, yes. Why not? Yeah, I see, like we say on the overview yesterday. Yeah, recording is going to be ready, Raji, in, I would say, given 45 minutes there. Like we say yesterday, the path is very clear. Is dollar strength and dollar index. Let's see if this time around we're going to be able to get it right. Last week, we saw at one moment a similar path and the third portion didn't happen. So let's see if we can get it right this time around. Okay, guys, if no, let's leave it there. I'll get back to you guys soon. All right? Thank you.